The cattle industry often gets a boost in beef demand around the start of summer grilling. But how is the slow economy affecting our consumers? We have more in this week's Market Watch.
Market Watch, brought to you by Fort Dodge Animal Health.
Joining us today is Dwayne Lenz of CattleFax. Welcome back, Dwayne.
Thanks, Susie. It's good to be back.
Always good to have you. Dwayne, we're headed into the summer grilling months, and we would expect that the beef prices would gain some momentum from that. Is that actually happening?
It is. Prices are starting to move higher now, finally. You know, it's been a long demand, slow period for beef, coming out of winter and into a spring that was wet and cold through much of the Midwest and much of the East, and that really slowed down people coming in and buying especially high-priced beef. We've had a lot of pork and poultry on the market. In fact, pork production is up about 10% this year. So as people are out there, you know, and with all these costs going up, fuel costs, and they're looking at ways to stretch their dollar, they have this cheap protein to choose from, pork and poultry, and it's made it tough for beef, especially for our high price cuts. Trimmings, chucks, those kind of items have done real well lately. But now things are changing. Spring's in the air. It's warming up. People are coming out. They're stirring. They're going to restaurants. We're finally starting to see these beef prices move higher again.
Good. Well, recently we saw a surge in choice production that had pulled the spread between choice and select prices to a very low level. Has that improved?
It is. It's finally starting to widen out, and it's been a real strange time for us. You know, usually choice is always selling at a premium to select. But this year they've been even, or basically even, which is very unusual. But a little bit of what we talked about earlier, you know, people are looking for lower priced items and looking for chucks. Maybe if you're buying and making a chuck roast, it really doesn't matter if it's a choice or select piece of beef. So they're coming in there, they're looking for something a little bit lower priced. We've also had real big choice beef production. Choice beef production is up about 7% for the year. So, but now again, we talk, things are warming up. They're pulling out that grill. They're looking at getting a T-bone or a ribeye to put on the grill. As that happens, all those higher price cuts are starting to move higher, and that widens out the spread for us.
And as far as cattle prices, is all this having an impact?
It is. We went down to the mid-80s not too long ago, and we've bounced back since, but it's very, very difficult. Feedlots are losing a lot of money right now. They have high cost of gains, high break-evens, higher input cost all the way through. And so losses at the feed yard level have been quite horrendous, really. But we wish we could say things are just going to get better here, but we've got peak supplies in front of us still, so I don't know, we have to lose a lot, but making that move into the mid-90s right now may be a little bit difficult. On the other hand, we're seeing smaller placements into feed yards going forward, so we're optimistic about the second half of the year. We think the prices will improve, profitability will improve. It's just unfortunately getting through this next 30, 45 days.
It will improve, as always. Great information. Thanks, Dwayne.
You bet. Thanks for having me.
Always a pleasure. For more information on this topic and other industry analysis, visit cattlefax.com.